नमस्कार सभी को. This video, let's discuss the numericals based on the topic already uploaded on how to treat interest on partner's loan. Earlier I have uploaded the concepts. Today we will be applying those concepts in numerical examples. So for the sake of convenience, I have written at the top just the entries, what journal entries to be passed. So remember, we had already discussed two conditions. The first condition says if any partner gives loan to the firm, in that case for providing interest, just look at the top left for providing interest. So the entry is interest on partner's loan account debited to partner's loan account. So here partner's loan account is opened separately. It is maintained separately. When will you maintain? When a partner is providing loan to the firm, and for closing that interest on partner's loan, that closing entry is passed by debiting profit and loss account to interest on partner's loan account. So these two entries you have to pass. All right, now let's look into the question. The question says A and B started partnership firms on 1st April 2017 without any deed. Now remember the first point, without any deed. As per the Indian Partnership Act 1932 says, if there is no agreement, in that case the profit should be divided equally, and if any loan is provided by partner to the firm at that time, he or she is bound to get the interest at the rate of 6% per annum. Remember, equally profit should be shared equally, and interest on loan should be charged at the rate of 6% per annum. Now further question says introduced capital of 5 lakhs and 3 lakh respectively. That means A has brought 5 lakh and B has brought 3 lakhs. Then further on 31st October 2017, that in the middle of the year, A advanced of 2 lakh rupees by way of loan to the firm without any agreement. So A has provided a loan of 2 lakh rupees in on 31st October. So from November to March, we will give the interest. November, December, January, February, March. In this way, we have got 5 months. Why we are counting it till March? Because our year ends by March, right? So when the loan amount is provided from that date to the end of the year, we will calculate. So this way we have got 5 months. This will help in the calculation of interest on loan. The question further says the profit and loss ended on 31st March showed a profit of 4,30,000, but the partners could not agree upon the amount of interest on loan to be charged and the basis of division of profit. So it doesn't matter whether partners have agreed on amount of interest on loan and division of profit. It is very clearly mentioned in the Indian Partnership Act 1932. If there is no agreement, if there is no written mutual understanding, nothing is there, at that time loan interest should be 6% per annum and profit should be shared equally. So let's start the question. First we will look into the working note. So working note is made here in the middle bottom. First of all, we will calculate the interest on loan. So in the question it says on 31st October 2017, A advanced a loan of 2 lakh. So the 2 lakh multiplied with 6%, the rate of interest will be 6% into 5 months. Why 5 months? November to March. So in this way we get 5,000 rupees. Now remember, in this question, this interest on loan is a charge against profit. That means whether firm earns profit or loss, interest should be given. So second working note is net profit after A's interest on loan. So already the question, in the question it is mentioned the profit is 4,30,000. So we will deduct 5,000, which is A's interest on loan amount, that gives you 4,25,000. All right. Now interest on loan transferred to the loan account. Here, as I already mentioned in the beginning, that loan account is separately maintained. Therefore the interest on loan account will be transferred to the A's loan account. Then this 4,25,000 will be divided equally in 1:1 ratio. Working note number 4, 1:1, that means A will get 4,25,000 into 1 upon 1 plus 1, right? 1 plus 1 what? Because 1:1 is the equal ratio. That means 1 plus 1, that is the total ratio is 2. Out of 2, 1 given to one part given to A, second part is given to B. Therefore, the divisible profit is 2,12,500. So this is the working note. Now let's start with the journal entries. On 2017, that is 1st April, the first entry is passed when capital is introduced. So in that case, since bank account is a real account, the golden rule accounting says what comes in debited. So here bank is debited since they have brought money. So bank account debited with 8 lakh rupees to A's capital account to B's capital account, which is mentioned in the question that A has introduced 5 lakh and B has introduced 3 lakh. Second, on 31st October, as question further mentioned that A has advanced a loan of 2 lakh. So in that way, the entry goes bank account debited to A's loan account. Then on 2018, coming next year, on 31st March, that means on the end of the year, we will provide the interest which is provided yearly. So interest on A's loan debited to A's loan account. So here you remember in the initial two entries, interest on partner's loan account. So here interest on A's loan account debited to A's loan account to partner's loan account, right? So either who is providing loan? A is providing. Therefore, his name will come, and that A's name will come, A's loan account. And amount already we have calculated in the working note. Then on 31st March, profit and loss account debited to interest on A's loan account. That means we are closing this entry. We are closing this interest on loan by transferring it to the profit and loss account. I'm just following this, which is already mentioned in the beginning. Okay. Then in the last, profit and loss account debited to profit and loss appropriation account. Whatever the balance is left, that comes here, 4,25,000 will be transferred to the profit and loss appropriation account. So this is the journal entry. Now the partner's capital, last entries, profit and loss appropriation account debited to A's capital to B's capital, which we have already seen that 4,25,000 will be distributed equally since there is no partnership agreement. Now let's look into the partner's capital account.